And good evening. This is the Elliott wave update for the S&P 500 for Wednesday, July 13th, 2022. It was an interesting date. That would be an understatement. We did get the CPI number. It did show that inflation jumped another percent, and it's not receding at all. This produced what I would expect the market to have done on such a report. And that was initially go up. Actually, I wasn't expecting it to do that, but it did. All of the equity indexes just popped very quickly. And it was like, what? And then it was so as quickly and swiftly and fiercely destroyed, rejected, trampled upon. With the S&P initially running as fast up to 38.71 and then dropping very, very quickly to that low at 37.52 before just then deciding that, yeah, we really want to be up off this low. So they spent the balance of the session just trying to work their way higher as the NASDAQ went into the positive territory more than once and now is sliding back below. So again, what it appears is that we are still in this minor fourth wave triangle. And now we've done A, B, C, D, and now we just have to do an E wave. And it actually doesn't have to get that high. And to take a look at that, I'm going to drop down to the hourly chart. And as soon as my computer catches up with me, there you go. And then we can put in retracements that Elliott left for us on where and how we would look for what resistance coming back wave to wave. And as the triangle gets smaller, it's about 618. Each time it would be, we'd be looking for 618. Now we're looking for 618, but in the opposite direction. So big A wave, 618 for the B wave, 618 for the C wave, 618 for the D wave of its previous. So the D wave is 618 of the C wave. And actually, it was came in more, but came in close to 100. But still, what we're looking at is the possibility that the S&P can rally back to 38.57 up to 38.72. Let's call it 75. That level, 76, which we were at yesterday. And still complete that E wave, turn and die, be rejected. So rejection, rejection, basically rejection, again, another rejection. So each time we get it pushed, we're like, no, and they find enough sellers. So here we sit again. That's the basis of the triangle pattern. If this completed wave D, and this is A of E, B of E, we should turn and do a C wave up. And that C wave up, honestly, I would expect it to get here and here. And maybe we get another one of these tomorrow on with the release of the PPI. Somebody goes, oh, we love it, and off it goes. Now, the outside of this is that the market would have the potential to break a little bit above that 38, 72, 75, 76 area and start getting up towards the top trend line, which is actually 39.10. At this level, I don't suspect that we would likely break 39.21, but we could get up and get a little push above and then a quick drop. And it would go up, I think, as fast. And of course, then the reaction would be just as quick. So tomorrow morning, don't forget, we have jobless claims and PPI same time. Both, like today, are going to be a gauge on which we can determine inflation, what level we're at, what our possible response could be from the Fed, and so on and on. But now, hey, we got time. We got a full month to pundit that one to death about what the Fed will do with this inflation. Well, they have an emergency meeting. Well, they do this, well, they do that, blah, 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 blah. It is just conjecture. And actually, folks, it sells airtime. I'm going to fill mine with what the possibilities are. So I think we still have an E wave, but when it is finished, then I continue, as we know, from a triangle pattern. I will continue to look for, as soon as I get my chart, come on. I'm going to clean this guy up. There he is. So we get A, B, C, D, E, get us back up into here, and then boom, we thrust out of the triangle. Well, here's the triangle, right? I've drawn the lines. So on that drop, what would I expect? I expect it to break below 37.52, and then 41, and then 693, and then what's that one? 661, and then 639. I expect it to break all of those as this minor fifth wave kicks in and takes us into these levels. And again, once that fourth wave is complete, I can then add that fib that takes us for wave 5. But I need that completion point first. Okay, so for tomorrow, again, hats off, because I could not begin to say, I don't know what the reaction is going to be to that PPI figure. I don't think it's going to show a grand improvement in the producer prices that weren't reflected in consumer prices. So, because I don't see their end getting any better yet either. Supply chains are still difficult. There are still a lot of items that are hard to kind of pull in, and when they do, they cost more. So I'm continuing to see prices up at a producer level, because it's filtering down to our consumers. So in any case, I would think that we got to follow what the pattern's telling us, and the pattern saying we should get an E wave up. And like today, it might most of it happen overnight in anticipation, or whatever you want to call it, that what's coming, it's because of this, because of the Fed, because of this, because of that. It's like, who cares? It's going to happen one way or the other. I'm going to let somebody else do all that work. We can trade the price action. We can trade what we're expecting. If we get it, we see it, we know what, we can put parameters around it. We can put parameters around each particular portion of what we think. If this is A of E, B of E, B of E cannot break below 37.52 and still be called the B. It's going to be something different. Originally, I had put the D here and the E here, and this was the start of that minor fifth wave. And if that's the case, folks, I'll flip it around. I don't think that that is the case, but should it be, then I can finish wave 4 up here, and we're in the start. And that would suggest that what we're going into is something that'll just drop and drop and drop and drop. And I'm serious. It's going to be this could be the small 1, a small 2 of the start of this fifth wave. And it would be a third. I would definitely expect that third to break 37.52 pretty quick. All right. I am going to leave it here because there's not much more I can be adding to this. But I wanted to just kind of throw something else in that I also included throughout the update on the NASDAQ, is that I'm realizing that what really takes place is that this is not easy to trade. So if you're having a more difficult time, or if you're not meeting your own expectations, and you're just getting kind of creamed in the trading itself, because your signals have also now been skewed a little bit because the patterns aren't clear. So sometimes you'll catch, sometimes there are some decent moves, but playing both the S&P and the NASDAQ really now starts to boil down to triangle patterns can sometimes just be left alone. Let somebody else try it, because what is taking place within are things that are happening in stocks that are moving in both directions, right? Apple going in one direction, AMD going in this direction. So they're forcing the market higher, which will give you that push. And because of their representation in terms of what their weighting is in the S&P and what their weighting is in the NASDAQ on Apple, it's number one. It's number one in both of those indexes. So we get a lot of jerky moves. And so that's why these patterns resemble each other, because they're really being controlled by the same group of companies. We have Apple, we have Amazon, Google up there, pulling it in the opposite direction. We have Meta, we have Microsoft, et cetera, et cetera. Those are, and Tesla, crazy Tesla, sits up there with a very high percentage. So high weighting. That is what keeps this in control. And it's not easy when the reality is saying the market really should be declining because interest rates are going to jack them up again and things are going to get even tighter than what is being presented to us. But there's enough money, folks. There's enough money coming in. There's enough money out there to play that is going to keep the trading good for a while. But here is a bottom line for me. If you're able to step in and you can make half your goal, most of your goal, or your goal, and it's the first 15 minutes, take the balance off. You made your goal, you made your money. This is not easy. What you make in the first 15, you can give back in the next minute. So we all know now, we're trading this for a while, right? Since last week. We walked in on Monday, and then that's what this all is now just been playing out. But Monday, that's 1, 2, 3, 4 weeks ago. So we've been playing this for 4 weeks. This, what are you guys doing and how are you doing it? It is old. It is getting old. I understand that. Make a choice. Keep your focus. If you make your goal, be happy. It's summer here in North America, folks. And we live all across the country. Take the time, get outside, just enjoy being you in a different environment than this. And that's where I'm going to leave it. Tomorrow, play the price action, use the moving averages, use the Fibonacci, use the Elliott patterns. Understand what it is we're going to be stepping in to confront. More confusion, more don't know what direction should go in. Our next update will be on Thursday, July 14th.